Here are the crypto top headlines covered in this video. Cult of irrelevant coins, Raoul Pal's scathing critique of XRP and Cardano holders. Next, crypto and commodities poised for massive rally, says market analyst. Also, Circle predicts stablecoins will become mainstream global payment method. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Cult of Irrelevant Coins, Raoul Pal's scathing critique of XRP and Cardano holders. Popular media personality Raoul Pal believes investors should avoid old coins like Ripple's XRP and Cardano ADA. He made these comments during an interview posted on the X platform. The move comes as Ripple closes a major legal conquest against the U.S. Securities and Exchange Commission in a 3-year-old lawsuit. Powell contends that despite potential positive outcomes from the legal battle, older coins are no longer as relevant due to a lack of innovative edge compared to new cryptocurrencies. Raoul Pal takes aim at XRP holders. The CEO of Real Vision strongly believes that investors need to move on to these better, innovative alternatives, and that many among the old guard are doing a disservice to the crypto cause by being in a cult of irrelevant tokens. This was a direct jab at the XRP holders, who are known to be a vocal community on platforms like X. Their collective online activity does point to cult-like behavior, as Powell was quick to point out. He said, "Please move to where the strong momentum is. I know the feeling that this time is going to be the big one. You'll get plenty of motivation to get back in. Don't miss the bull market because you are in a narrative of the past. I don't want to get attacked by people for this, but I feel like you've done a disservice by being in a cult. Cults don't make money except for the leaders." He went on to include Cardano in his prediction of old irrelevant coins, basically calling them relics of the past. This hard-hitting criticism of some of the first altcoins to emerge from the crypto market invited mixed responses from the crypto community. The future. Powell is clear in his take and wants investors to stop sculling around older digital currencies that the market has rejected. However, other older coins continue to shine if we take Powell's criticism to the word. They are expected to have a big 2024-2025 bull market, including Ethereum, launched in 2016, Dogecoin, introduced in 2013, and Tron, which began in 2013. So, the difference between them and coins like XRP and ADA is that those two supposedly stopped innovating. Ripple has upped the ante in the last year, striking deals with banks, remittance companies, and governments worldwide to increase its appeal. The issue of lack of innovation is debatable, as a host of legacy coins remain slow to respond to change. However, comments like these from Powell aren't likely to change the stance of the strong XRP community, and they are likely to continue their tireless efforts to promote the cryptocurrency on all social media platforms. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Crypto and Commodities Poised for Massive Rally, says market analyst. According to Michael Vanderpop, an upcoming surge in global liquidity fueled by debt refinancing could trigger the next Bitcoin bull run. A notable market analyst believes the cryptocurrency and commodities markets could both be ahead of a parabolic rally. This is because both crypto assets and commodities remain extremely undervalued, according to analyst and entrepreneur Michael Vanderpop. The analyst noted in a September 15th post on X that commodities were last valued at similar levels in 2000 and 1971. Commodities and crypto are extremely undervalued, and it's likely that commodities go into a 10-year-long bull market. I'm expecting a lot of upside from these two asset classes. The index shows that commodities are valued at lower levels compared to the bubble of 2000 before the markets rallied up into the 2008 financial crisis. Increasingly, more analysts are calling for a Bitcoin breakout in October, which could be catalyzed by next week's Federal Reserve meeting on September 18th, which could bring a widely expected interest rate cut. Global liquidity is about to break out, says Raoul. An incoming rise in global liquidity could catalyze the next Bitcoin bull rally. According to Raoul, the founder and CEO of Global Macro Investor, this is mainly because the leading economies will be forced to refinance their debts. This will drive a global liquidity breakout in the US, Japan, China, and Europe, Powell shared in a September 15th X video. As global liquidity rises, cryptocurrencies will rise, as will other markets like the Nasdaq. Global M2 is also starting to rise. Part of this growing global liquidity could find its way into Bitcoin, leading to the next leg up in the 2024 cycle, since Bitcoin price is highly correlated with the M2 money supply. Bitcoin heading for 3-month historic rally as analysts eye $92,000 per BTC. Based on historical chart patterns, Bitcoin appears poised for a 3-month rally after a decline lasting more than 3 months. Bitcoin recently retested a key support level on the weekly chart, which could set it up for a rally above $90,000, according to popular analyst Titan of Crypto. The analyst wrote in a September 13th X post, "In previous cycles, when the price retested the 50-week simple moving average, it bounced at least 40%. On average, the bounce was 71%. If BTC rallies 71% from here, it could reach $92,000. However, Bitcoin's anxiety stage threatens more potential September downside ahead of the next leg up, which could be catalyzed by the next Federal Reserve meeting on September 18th. Our next top headline, Circle predicts stablecoins will become mainstream global payment method. Stablecoin issuer Circle expects internet payment firms and other financial services companies will attempt to enter or expand in the space. Circle, the issuer of the world's second largest stablecoin, USDC, feels confident that stablecoins will become mainstream money. Simultaneously, regulations should be harmonized globally to ensure compliance for all payment stablecoin issuers. Circle is confident that there will be mainstream adoption of stablecoins as the money for the internet age. Dante Disparte, Chief Strategy Officer and Head of Global Policy at Circle, told Cointelegraph in an exclusive interview, "We expect there will be internet payments firms and other financial services companies that will attempt to enter or to expand in this space, which is a strong signal that stablecoins are here to stay," Disparte pointed out. However, Disparte feels it is equally important that rules and regulations be harmonized globally. He said that the essential principles of conservative reserving and financial crime compliance should be applied equally to any company claiming to issue a payment stablecoin. Circle moves to New York. Disparte's comments come as the stablecoin issuer prepares to move its global headquarters to New York by early 2025 after filing for an initial public offering, or IPO, in January. Disparte pointed out that the U.S. framework empowers state banking and money transmission supervisors to develop and regulate the payments industry at the state level. Other countries regulate payments or electronic money, or e-money, activities at a national level. A key question now is whether the U.S. will finally enact federal stablecoin rules or maintain the status quo of uncertainty, which policymakers in both U.S. political parties say is unacceptable, Disparte said. He explained, "The absence of a U.S. regulatory framework for dollar-referenced stablecoins represents a threat to American interests. This vacuum could incentivize the creation of products that exploit trust in the dollar while bypassing U.S. regulations, potentially becoming a refuge for illicit actors. Federal legislation for payment stablecoins is essential to promote safe competition for how Americans send, spend, save, and secure their money in an increasingly technology-dependent market, according to Disparte. The stablecoin bill, advanced by the House Financial Services Committee in July 2023, has generated significant policy momentum and support, he said. Congress should approve such a bill on a bipartisan basis, and the President should sign it if it comes to his desk. The legislation would create a floor for all issuers to comply with the U.S. anti-money laundering, countering terrorist financing, and sanctions obligations, Disparte said. He added that these norms should be applied to U.S. issuers of payment stablecoins, as well as their international counterparts, many of whom are being licensed to issue dollar-denominated stablecoins from jurisdictions including the EU and UAE. Will EU's MiCA 2.0 fill gaps in the regime? The European Union's markets in crypto assets regulation, or MiCA, came into partial effect in June, with new rules concerning stablecoins coming into force on June 30th. On July 1st, Circle said it had become the first global stablecoin issuer to achieve compliance with the MiCA regulatory framework after it got the Electronic Money Institution, or EMI, license from the French Banking Regulatory Authority. Circle's USDC and EURC are regulatory compliant under the new rules. With MiCA, Europe succeeded in doing what other jurisdictions, including the U.S., have yet to achieve: provide legal and regulatory clarity for not one piece of the digital asset market, but all of it, Disparte said. However, he pointed out, like all novel rules or comprehensive regulations, MiCA is imperfect and in places overly prescriptive, so much so that EU policymakers are already contemplating MiCA 2.0, which would potentially fill certain gaps in the regime, such as non-fungible tokens, decentralized finance, and other areas. Stablecoin market sees increasing competition. Competition in the stablecoin market is heating up, with new entrants like PayPal's USD-pegged stablecoin, PayPal USD, or PYUSD, which has already surpassed $1 billion in market cap. Ripple Labs has started testing its USD-pegged stablecoin, Ripple USD, or RLUSD, on both the XRP ledger and Ethereum, and it plans to expand to more blockchains. Tether's USDT remains the largest stablecoin with a market cap exceeding $118 billion, according to data from CoinMarketCap. Tether has also announced plans for a new stablecoin pegged to the UAE dirham, or AED. On August 26th, the market cap for stablecoins, excluding algorithmic ones, reached a record $168 billion. The market hit an all-time high of $167 billion in March 2022, but fell to $135 billion by the end of that year. We invite any competitors to come to America, the EU, Singapore, and beyond to submit themselves to a vigorous licensing process, to follow the same standards that are the bedrock of our company, and to join us as regulation-first, compliant companies so that this ecosystem can grow and thrive long into the future, Disparte added. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.